All right. Awesome. We're live here on the Independent Investor channel. My name is Ryan. I want to thank everybody for the flexibility on the channel. I will address the elephant in the room. I will allow a little bit more time to pass here and let some folks make their way in here. First of all, happy Father's Day to everyone out there that's celebrating or have been celebrating throughout the day today. I know I did. I spent probably too much time near the pool today. So really good stuff. Had a great time this weekend. And I just wish you guys all the best. Again, thank you for the flexibility on the channel. A little bit of a shockwave on the channel. I'm not one of those guys that really put too much faith in the social media landscape. I know social media is really an exciting thing. And for me, not being a social media fella up till about a couple years ago, I don't trust it. I don't. So when I come onto social media and I look to share my story, I do so with an anticipation that perhaps maybe it could fall under scrutiny. You know, we're really making ripples on the Independent Investor channel. I'm looking to use this, and I don't typically hold back on my message. And I've got very in-depth opinions about where my allegiance lies with regard to self-directed investing. I've had 4 interactions in my life with financial planners, all of which have been good, but looking to really uncover what I feel like is an agenda that is shared across the industry. And I think people really need to understand and have a little bit more awareness about what's available out there. And I do nothing but validate that on the channel with people who come into the community and say, Ryan, I can relate with you. I agree with what you're saying. I've went through the same thing. Or we take a look at a financial disclosure and we identify some of these things that go unbeknownst to a lot of people. And that's a lot of the key on it. Thank you very much for that. I really appreciate it. I'm not sure how long of a live stream I'm going to do tonight. We'll aim for normal time. I'm very, very excited. I love each and every one of you guys. I really do. In the description, I really wanted to portray how much the community and the channel means to me. To get to come on and talk about my favorite subject and to be paid back in a manner that you know, is empowering to people. And it may be a very major milestone for people. It may be kind of a minor introduction for people to something that they may never have been introduced to. That right there is payment enough for me. And I get an extreme amount of satisfaction out of those individualized responses back to me about how they've taken and responded to the message. And I want everybody to feel like they're part of something special. I really do. I tend to do my best in trying to keep this message anything but shallow. We get in depth on this topic and we talk about things that are really aimed at striking up a nerve in people. We've got a great community in here tonight. I'm going to kind of work down this live stream because there's been a ton of comments come in before this live stream, and I do want to address some of the particulars here. But obviously, awesome. Does this mean your channel is no longer under ridiculous investigation? I don't know. I don't know. I don't know, and I don't really care. I don't. I can sleep easy knowing that I don't leave any stone unturned for my audience. If they've made their way in there, and it's the 15,000 people, the subscriber count on the Independent Investor channel, that's wonderful. If you're new to the message, you're going to have to work really, really hard for yourself to connect with the message, because a lot of folks that have been in that are the loyal followers of the channel, they get it. They get it. And they've probably been given the greatest gift. Why can I say that? Because I remember when I was given that gift via referral myself. And there's folks in here that are enjoying self-directed investing to some percentage or in its entirety. I'm pretty much all in with self-directed investing. Even my 401k with the military, the TSP that I have, is 100% self-directed. I don't do the life cycle funds, but both of my IRAs are of a self-directed nature. And I know there's folks in the group that do both options. They look at the self-directed option, and they've got a little bit of a layer in their holistic financial picture doing that. But a lot of folks that tune into the message have regular jobs, have regular employments, have employer-sponsored 401ks, 403bs. There's teachers out there, firefighters, trade folks that are self-employed looking to seek out their options. And it's really interesting as well from a global perspective. Some of the folks that come to the channel and they say, Ryan, I'm not eligible to do what it is that you're talking about in the US. And for those folks, we're going to be as strategic and as aggressive as we can in really sowing those opportunities for folks and identifying. But for a lot of people in a lot of the other countries that tune into the Independent Investor channel and consume this information like it's candy, the flip side of that's ironic is that I've got folks that are in the United States that do everything to talk them off of the topic, or to pick an option. And I'm going to talk about that a little bit, about choosing the option of least resistance, choosing the option that kind of goes with the flow. You guys know I talk about the status quo all the time. And my initial fear when I had the email come through the channel, I do believe it was an attempt at spamming the channel, actually. But I don't know for certain if that's the case. I don't know. I've heard some stories about some of the larger channels, being demonetized and this and that. And I just don't think, I don't really value that type of thing. I don't think we're that large of a channel. I think we're very impactful, but am I large enough of a channel to get this type of attention? I know my good friend in the Facebook group, Ernest, hit me up and said, maybe we're getting big enough to be making some waves enough to where it's getting some folks' attention. But here's the thing. The biggest benefit that you could do for me on the channel is, number one, accept the channel as a YouTube channel that is put over YouTube for entertainment purposes only. I'm the first to disclose that I'm not a certified financial planner, okay? Therefore, I can't sit down with somebody and offer specific financial advice to somebody in response to what they tell me their need is, okay? That's really where it crosses over a black line that is very well defined. It's very well defined. Now, the part that isn't so well defined is the discussion about fundamental wealth building and the strategy and the psychology that it takes to invest in the stock market. And I tend to drive a lot of the conversation toward getting some of that stuff straight. And then it really paints a clear picture for folks when they're looking to make those decisions for themselves and say, you know what, I really don't want to be that type of investor. I don't want to invest in the blind. I would rather have a little bit more access to my money. I'd rather have a little bit more engagement with my money. And that's a lot of what the Friday and the live streams do when I put these pulses out there, or the couple videos a week, is to energize the topic of financial awareness. That's really what it's aimed to do, is to get folks excited about investing that wouldn't have become introduced or excited about investing had they not tuned in and heard that certain something that I was able to say, or say that certain something that's in relation to how I invest. And they're like, wow, I want to do that too. How can I do that? Now, introducing financial products and introducing websites that you can go to and search out your financial products. There's nothing wrong with doing that, nothing. And that's typically how I frame that discussion, is to attempt to show you to the trough and allow you to kind of eat yourself. And the thing about it is, if we can do that, if we can teach people what's available out there, okay, it typically comes down to this piece here, the equities versus the bond exposure. And we get into depth on this particular topic. And it helps people understand that they don't need to look at the entire investing landscape in its totality only to get confused, get frustrated, and then just seek out exposure in the traditional way. We don't need to do that. Give yourself some time, all right? You're not in a rush. For a lot of you guys, it will be worth the investment in this topic to give it a little bit more time in understanding the topic before just jumping into the topic only to jump in on false pretenses or a false understanding of what independent investing is, only to not understand what you need to understand to succeed, okay? Because ultimately, that's what we are after. We are after success for people. I tune in every single Friday, and this is the coolest part for me, is that making YouTube videos is extremely one-sided. I don't typically enjoy that one-sided aspect of it. I really, really enjoy the group that comes in and looks to engage and empower themselves as a group of not only elderly investors, experienced investors, elderly folks with no experience, or our younger generation who are representing, you know, a little bit different idea, a little bit different approach to empowering their own program. I have one of those in the group tonight, and that is Lydia Santiago, who hasn't come in to the live stream. I know she works late on Friday, but she's made her way into the group this evening. And that's a lot of reason why I really like her message, because she's relating with a lot of folks that maybe potentially people tune into me and they're like, yeah, okay, the guy's experienced, but he's not talking my language, you know? And a lot of what we need to do is drop those barriers that you have. Stop looking at other people as old, young, you know, this ethnicity, this, you know, group, or this different, you know, background. It seems like if you're either pro-life or pro-choice, that puts you in that particular corral. And I don't mean to get political, but you understand my point. I'm so tired of people putting people in a box, you know, and saying, I can't talk to this group of people over here because they believe something in some certain way. I think you guys would be surprised to know that I feel like we have a lot of commonalities. I do believe in good and bad. I really do. I think there's good people out there, and I think there's bad people out there. And you guys can chastise me all you want for saying that, but I don't think it has a whole lot to do with your economic background. I don't think it has anything to do with your ethnic background. I just think that we're trying to aim and reach people on a personal level. And for what that means is something different for a lot of people. And the challenge for me is to find those common threads in investing that can make sense for the majority of people. Now, we can take those common threads and we can put those to work. Perhaps maybe we'll have a huge impact. Perhaps we'll have less of an impact, but at least we're making an impact. And the success of the channel will be made by measuring the degree of impact. It's the degree of impact. So if you're a 20-year-old and you're making your way to this information, sit back for a second, do yourself a favor, because this information is life-changing. It is life-changing for those folks that make their way in, they find it, and hopefully there's some validation in the community that can help attest to that fact, all right? So just keep in mind, the channel is, I haven't heard any follow-up to the email. It was startling, not surprising. You guys kind of know, and I wish I knew you guys more. I really do. I should have everyone throw something personal about themselves, like maybe, you know, what city they're from, whatever, because I feel like I'm about the most transparent one in the community. But the channel means a lot to me. It really does. I feel like we're fighting a system that needs to be called on the carpet. I do. And if it just happens to be me, so be it. I'm prepared to fight that battle because it's fightable and it's winnable. Now, I'm not saying that the status quo is necessarily wrong, but the longer that the status quo is able to proceed, the more chance that the larger institutions have to define the playing field. And it really, really becomes beneficial for the client or the folks that are the receivers of that service. Continually keep a balance check on the system to make sure that they're being provided a fair shake. And in my opinion, over the last 20 years, especially over the last 10 years, and there's been a key couple of revolutionary things that have happened in the investing world for sure. Obviously, the mobile device, the evolution of the iPhone has made a huge difference in the amount of access. People demand more. Now, if you're happy with going in once a year and having your financial portfolio checked up on, okay, I have an opinion of how big of a bull that is. It's really kind of a compass check to make sure that you're staying on track and staying naive about your program. The flip side of that coin, and I think the evolution of the investor, is to make investing part of your life. Okay. Make investing part of your life, like physical fitness may be part of your life, maybe doing away with certain vices in your life. Living day to day better than you lived yesterday. Becoming a better person. Engaging in some self-study, right? Now, as far as the stock market has gone for the last, couple months, it's been fairly boring for me, to be honest with you. I came out with a very, very timely stop selling video for you guys that tuned into that. Congrats, because that would have definitely hit a pulse with a lot of new investors who were looking to panic out of the market. That would have been a big mistake. Okay, I don't know how many thousands and tens of thousands of dollars we saved by putting out that message. There's a reason why we do that, and that's not what people want to hear when the market is going down violently every single day. That's not what people want to hear, but people need to hear that information, okay? And that's why we put that stuff out there, to let people know, look, sometimes the best thing that you can do is nothing, all right? But Stings123 says, happy Father's Day. I hope you had a great day. I have a great day every day. Me and my family, we tend to approach things like this a little bit maybe differently, and that's why I can come on and do a live stream. Even my brother said, what the heck are you doing a live stream on Father's Day? My approach to life and things that typically are put in a box, I typically don't really, I don't like being told what to do. My kids love on me every day, and we don't need a special day to celebrate. You will not see a post from me on Facebook. All right, you won't do that, because I think that's a little bit more of an intimate moment that I'll spend with my children and my family. I don't need to share it with anybody out there. That's between me and my kids. But anyway, happy Father's Day to everybody out there. I really appreciate you making your way on here. But thank you to Lydia, who's the channel creator, who's popped on here. If I see any more crank in here, I will do my best to call those folks out for sure. But missed the live on Friday. Obviously, that was short notice. This reminds me, the upload frequency on the Independent Investor channel is going to slack off a little bit. I'm going on a very, very well-deserved vacation down to the Caribbean over the next couple weeks. You guys, if you're not following me on Instagram, it might be your opportunity. I'm not looking to pick up, Scribner said he's picking up 20,000 subscribers on Instagram. That's awesome. The guy's looking to build an empire. I am not. I'm looking to build a community of very devout subscribers. But if you guys want to follow me on Instagram, I will probably be updating that post as that's the easiest way to do it from St. Martin, our place of destination in the Caribbean for the next 2 weeks. So obviously next Friday's live stream, I will be out of this country. So I will be in the beautiful island of St. Martin, taking a well-deserved vacation. I'm overdue. I've been really hitting it hard. I've been hitting the Independent Investor Channel project hard. Like I said, I don't leave any stone unturned. I do that for you guys. And I know you guys appreciate it because I typically dig deep on a Friday. Which, you know, there may be times when I just want to sit on the couch and chill out and do nothing. But once I get into my element and start talking about my favorite topic, it typically turns out well. And again, if we're, you know, impacting folks, if we're impacting those, and I do it for those people, who's to say that there's not somebody making their way into the channel listening to my message? And I take that responsibility very, very seriously. If somebody's coming on and they're listening to me and I'm having an off night or something, that's not going to work. I want to save everybody. I full well know that that's not a realistic goal, but for the people that we can save and get them started on a program and at least have them maybe recalibrate or reevaluate their existing program, we're starting that discussion and we're getting you to ask those questions. Very, very important. All right. Yeah, I was busy driving through Washington, D.C. traffic. That is the worst traffic I've ever seen in my entire life. Pretty much had to divert through the Shenandoah Valley to get home. So that was a lot of fun anyway. But I was indisposed on Friday. I do apologize, the short notice. I had my daughter post to Facebook that we were going to cancel the live stream. I just appreciate your flexibility. You guys know that I provide content at my leisure. I do that for a reason. I don't do this for a living. I've said this many, many times, and thank God. Honestly, I would hate to rely on YouTube. And I know there's a lot of folks that are making killer money on YouTube. I've yet to figure out how to do such a thing. Perhaps maybe one day when I'm 112, I'll be making killer money on YouTube. But I would hate to rely on this. Where we are right now, we'll continue to evolve the channel at my speed and, quite frankly, y'all's speed. Because if you guys are sharing this channel, which I know that you are, we're getting folks who are really interested in the message, and it's interesting. So I'm not going to apologize for the lack of growth on the channel. It's growing fine. I'm just not sure how much of a hook we're putting into new folks that are making their way into the channel if they're not willing to go back and review some of the content from my catalog of videos that I've already posted to YouTube. A lot of work went into that. And, you know, I enjoy it. I enjoy going back and reviewing my old content. Now, the delivery is a little bit different now with my new stuff that I'm putting online. But if you're new to the message and you're coming in and you're finding me, the prospect, and you're hearing things like self-directed investing and you don't understand what that means, go back and watch some of that. I get very, very in-depth on what it means, what it's meant to me, how and when I started, how I do it. And the channel should be taken as just that, a testimonial that provides the information. A lot of people will parse up this information and they'll deliver it to people in way of a stock market investing kit, blah, 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 right? Couple missteps on the channel. But we have stayed pretty close to the intent and the message of providing the information free of charge so you can come on, be part of a movement that's very, very special. You don't have to pay any type of membership fee, any of that stuff, because I've always contended on the channel that you need your money, okay? I need my money. I'm very defensive over my money. And when I tune into a channel that says, hey, thanks for tuning in, but my information is so valuable, you need to sign up for my course for $1,000. That's where I get turned off. And I know there's other people out there who feel the same way as me. And I think that's one small nugget on the channel that y'all can appreciate, that I deliver the information with really no reservation. I mean, if there's something that I can tell you, like my portfolio value, Um, I give you guys my allocation, my snapshots of kind of where I am. I have pulled back some of the exposure in the stock market. We're at 57% equities. I'll give you the exact percentages here. Let me log in. We're 57% equities, and I think we're around 27% fixed income, and the remaining is in cash right now. So back to a defensive posture, 57.71 in equities. And I've been transitioning a lot of the portfolio to a lot of the passive assets that I talk about on the channel all the time. So again, testimonial, I offer what I have, and you guys can discover those for yourself. Very, very simple. Go on the shopping mall of investment products and you'll see what I mean on the Vanguard website. If we can show you how to build those bridges and cross them yourself, we're doing so much better than if I just get up here and tell you what those products are. But 23.75% cash, so close to 50 there. This is just the investable capital that's scattered between the joint brokerage, and the 2 Roth IRA accounts. Okay, 40,000 in fixed equity and about 120 right now in equities. Okay, excuse me, fixed income. So 57.71% in equities, 18.5% in fixed income, and about 23% in cash. So pretty defensive for you home gamers out there. I know I've had a few comments, and I'll get to them. You guys that are thinking a little more defensive, I had Lydia Santiago make the smartest comment and said every time this market, the S&P, gets to that all-time high, it backs off. That's the resistance. Now, whether or not it's going to break through resistance, I would contend no, it's not. There's way too many headwinds in the market to allow that to happen. I can give no rational explanation as to why these markets are doing what they're doing and that they'll run up with no real rationale at all. So I would just contend, be patient, be defensive, continue to work on your discipline. And if you're new to the investing world, it's never, ever been a more exciting time to become an investor. But take those few additional moments for yourself and explore all the options that are out there. All right. I am a different YouTube channel. All right. I don't do this YouTube thing just to do YouTube and gain subscribers. I'm really trying to search for those perfect words to really impact people. So if you're hearing me out, allow yourself to be impacted. Okay. All right. You don't need to pay sometimes. Sometimes the best information that you can get is free of charge. And I'm the one that kind of allows that to happen on the Independent Investor channel. It's real. If you're questioning it, go ahead and question away. You'll find out pretty quick that I kind of do this on my own accord because I really am aggressive on looking out for the individual investor. All right. Until you can kind of get out on your own and search out and validate these prospects for yourself. Okay. Don't forget where you heard the information. I will take a thank you every now and then, and I get a lot of that through the channel, and that's the very validation. That's the full circle. When it comes back to me in that way, it means the world to me because I know this information has that type of power. All right, so let's cruise down. I've got Larry Massa in the group, who's an absolutely staunch follower of the channel, been with me a long time. Larry's a good friend of the channel. I'm thankful and looking forward to tonight's episode. Guys are funny. You guys talk like I'm like a host of a late night show or something. I'm just a regular fella. I go and do grocery shopping like most regular people. I am taking a well-deserved vacation, so don't hold a grudge against me there, but I'm also a very hardworking fella as well. So it's great to be back. I really miss this when I'm away from it. I do enjoy the heck out of engaging. This is a little bit more of an engaging platform for me through the live stream. And I'm glad to do it. I really enjoy it. So again, Lydia says, yeah, you're back. I don't know what the status it's going to be interesting to see if they mess with me. I don't know. Nothing will change with me, and nothing will change with you. So don't hold a grudge against me if Big Brother decides to turn off the Independent Investor channel because we're making such a huge difference. I do thank you guys a ton for participating in the survey that I put out there. I felt like it was the one thing that I could do to kind of fight the man a little bit. Had some really interesting. I mean, I didn't front load that in any way. I wanted honest feedback of the channel. I'm not really sure how a lot of people could say that it's a neutral benefit. But anyway, I mean, I want everybody to say it's life-changing, but we can't get to everybody. That's fine. But it'll be interesting to see how things shake out. I don't know where that came from. I really don't. And that's a lot of the reason why I've done away with watching other YouTube channels. I have a project that's mine. Anytime I watch other YouTube channels, it usually ends up getting me distracted from where my focus should be, and that's on the community here in the Independent Investor channel. And that's just the way that I'm going to approach it from here on out. So, and I think you guys appreciate that. Doesn't do anybody any good. I wish all the other channel creators, well, there's only a few that I think are really worth their salt. But somebody, I think it was Brent on the Financial Investor, had pulsed me into some correspondence back and forth between YouTube and the Monk Way, who has also had an investigation letter. So this stuff is very, very real. It's a little bit scary because this is not child's play, guys. I own an LLC that covers my Independent Investor channel work. My LLC covers my tax liability, limits my liability as a business owner, but I've got some financial stake. You know, these things, this lighting and the sound and the computer and all that stuff, that all takes money to start. And the licensing was the biggest expense, honestly, to get the LLC registered. So I think it's just, it hit me kind of hard a little bit, because it's like, man alive, I'm just a little guy. I'm making a big impact, and you want to come after me? I guess that's the world we live in with big tech right now. And again, like I said at the top of the live stream, I don't trust it. I don't. But if I've already got my message out, for you guys that have heard my message, it doesn't change. It's very real. It's very real. And if you guys don't believe me, substantiate it for yourself. For you guys that haven't been with me for a while, for you guys that have tuned into the channel for a while, you guys know that it's very, very real. And there's a lot of folks that have tuned back to me, and it's like, dang, man, this is awesome. And it is awesome. I would have never, ever been staring down $500,000 of net worth without this opportunity. No way. One of the greatest things that's ever happened to me. And I'm very blessed. I have a beautiful family. I have a great career. Great. I have a gift for stock and investing. I have a gift. It's always been my number one passion. I have a passion for music, but I'm a terrible guitar player. But I'm good at investing. I'm good at it. And the idea is just to kind of share my ideas out there. There's folks with skill in the investing world that I've come across through this opportunity that I've learned a ton from. So if we can just continue to enhance the dialogue, we'll continue to enhance the education and awareness on the channel. We're going to keep doing it until they hit the shutdown button. So I'm excited. We'll see what happens tonight. We'll see what happens if they hit the self-destruct button on me. But I don't know. I don't even know if they have ultimate control over that. Maybe they do. I don't know. We'll see. But I've got K97 here in the group who's got a string, and I told him that I was going to address this in the live stream because there's some really good comments here, wondering why amazing stocks like Procter & Gamble, Waste Management, Starbucks, Pepsi have just gone to the moon. Is it something to do with dividend investors building them up, anticipating a rate cut? I do. But it's really funny because these stocks, man, they'll go through swoons. Each and every one of those I mean, Waste Management was stuck between $70 and $90 for a long time. Pepsi was in a rut. I would throw Disney in there, Johnson and Johnson as well. Starbucks has really shot to the moon over the last 6 months, going from, mid 40s all the way up. I think it's mid 70s right now. You guys can correct me if I'm wrong. I'm not currently invested in Starbucks, but I am invested in Pepsi. It's one of the cornerstones in my portfolio. Procter and Gamble, unfortunately, I've made the mistake, and I don't mind declaring this over the channel. The only mistake I've ever made with Procter and Gamble is selling it. I mean, I'm up 6% right now in Procter. Holding stock right now long is not really something that I'm that excited about. If we were in a recessed bear market and we were down 30, 40%, I'd be picking up massive blocks of stock, no doubt. I'm just not into that right now. And even my positions in my passive stuff, these are all starting passive positions in my sector spider ETFs that I've taken. Starting position of 35 shares in the VTI. One of my good friends here, Bob, has popped in. Bob Wright made a comment in the pre-funk before the live stream. The VTI has made a phenomenal swing trade. I couldn't agree more. I've swung traded about 4 times, I think, over the last couple weeks and just racked up some profit. I'm up another 250 here. So we'll see if I bank that profit. I'm going to monitor it this week and see where we are. But absolutely, that's the mindset that we maybe want to take here with the market at an all-time high. If you want to get long stock, make sure that you're getting long for the right reasons and in the right percentages. For example, if you're a new investor, I would give you the green light to go ahead and go from a non-investor to an investor. As I've got positions in the stock market. The equities position that I told you guys about, that's still $117,000. It's still invested in the stock market. All right. But what you don't see is the amount of defensive layers that I've got all the way around that right now. That I'm waiting, and I'm willing to wait. I really am. If the stock market explodes and it goes Dow 50,000, I'll be a winner. If the stock market ends up going down and we end up seeing Dow 10,000, I'll be a winner there too. And that's some of the things that you have to understand is the stock market can really render some unpredictable results. And the trick is to sit back for a second and say, what is it that I can imagine being the worst case scenario in the stock market? Am I prepared for that? You know, is it really going to affect my mental health if I get a haircut and my invested capital goes down, let's say 50%? I've done videos on this, and it's a scary question to ask, but it's a good exercise. It's very, very effective in questioning your own risk tolerance before you even invest 1 red cent in the market. Ask yourself that question. Am I prepared to take my money into a downturn? And that's what Bob is talking about with regard to dealing with the stock market with kid gloves. Be very, very careful that you don't get too close to this fire right now. Stock market's on fire. I cannot deny that, but investing accordingly. Be careful with your investing. The world will still go round. You'll still have to get up in the morning and put your pants on. You'll still have to go to the supermarket and buy groceries. You're still going to have to pay the rent or pay the mortgage. All that stuff doesn't go away. It doesn't change. All we're looking to do is maybe introduce a slice of the investing world and optimize that slice. That's the key. Once you get that slice optimized in the investing world, you don't have to think about it very often. You don't. It'll work for you while you're off doing all those other life things. And then you don't have to wonder, gosh, should I be invested? All my friends are invested. What's my problem? You know, you don't have to think like that anymore because you'll be an investor. All right, let me cruise down here. Procter is amazing, but no logical way it should be where it is. That's totally legit. And from a valuation perspective, and this is, teaching you a little bit about stock irrationality. Stocks do this for some crazy reason, man. Like Nvidia comes to my mind about how irrational that drop has been. Um, I think the drop in Tesla was extremely rational, and everybody was talking about it going to 150. What happened? It turned right around and it's back way above 200 again. Irrationality of stock. What you think is going to happen probably is not going to happen. All right. Get used to that. The stock market is a humbling place. I've said this many, many times. And for you guys that have got invested since you've come to the Independent Investor channel and you're excited about the empowering prospects of becoming an investor, believe me, they are exciting prospects. But you're learning very, very quick, if you hadn't already learned before, that the stock market can really, really deliver some humbling results that you couldn't have foreseen. And it's really difficult to think that way because you think, geez, the stock market's either going to go up or it's going to go down. Sometimes it's amazing how it can do neither one of those two things. And you're like, how is that possible? I had it licked, you know? You thought for sure because it was reaching an all-time high, it was going to turn around and go south. And sure enough, it turns and continues higher. You just never, ever know where the stock market is going to be at any given time. So the best thing to do is approach it in that manner. Approach it in a way that allows you to enter the stock market with some scale and allows you to enter it with some care and some caution, because you always want to invest in the stock market with that in mind. All right. So K9 also says, and they are all going up in a very similar manner. I think you're right. I think there's a lot of people seeking yield right now in anticipation, perhaps, of a rate cut. I think that's true. What's going on in the bond market is interesting enough. If you're a bond investor right now, you're extremely happy. You're basically getting rich. So that's interesting. They've just been on fire. Bond yields have been amazing. There's been a lot of money pouring into the bond market. So that's been really interesting. It's really opened my eyes to the power of bond investing. And you guys know I seek my exposure through the Vanguard ETFs. It's been a real eye-opener for me over the last 6 months or so that I've built up that bond portfolio, had those dividends paying back into the ETFs from Vanguard. And it's made really money. Each and every one of them are up right now. There's not one of them that's down, and they're up sizable. I should have taken 100 grand and put it in there, but I didn't. I took a small position to scale in and introduce some bond exposure in the fixed income portion of the portfolio, and it was a very, very good strategic risk on my part. That's what I did, and without risk doesn't come reward. Okay, sometimes those risks aren't going to always work out for you. Sometimes they're going to work out. You take profit and it continues even higher, and you're like, oh, what if I would have just held it? I would have made so much more. If this sounds familiar, trust me, I've been there, done that. But the stock market's fickle in that matter. And all we can do is continue to educate and discuss the potential outcomes that can be seen. We can study historical precedents in the stock market, where the stock market's been, what it's done after certain recessions and bear markets and dips. And we can study that to try to get an idea about what potentially could happen. But historical precedence doesn't always guarantee future results. And I hate to sound cliche, but that's the most true statement in the stock market, that of which is declared in every single disclosure that you'll ever have in the stock market. But I'm going to kind of cruise down here. Got to be a mega drop soon, I would think. And those are the fun things that we can kind of talk about a little bit. I do think we're a year and a half away from a presidential election. I think that could be a very big ripple. We'll see what happens. The China trade war has really been an interesting gauge. I think the stock market likes it. It's just my opinion. I'm all about it. Again, I hate to provide my political opinion, but I think China has been getting away with murder for the last 20 years. And we finally called them onto the carpet. I think they're just much more aggressive about taking over the world than we are. So, and all the power to them. If they're going to be allowed to do that, then great, they're going to do it. And I kind of envy that aggressive posture about going after things, to expand their interests. Why would they not do that, especially if they're allowed to do that? So some interesting things in the next couple years. I think we do have a downturn, but good grief, we've sure been proven wrong over the last couple years. The idea is that you remain invested through it and you profit from it. And we sure have. We've definitely profited from this upswing in the stock market. But if I were going to guess as to what direction I think that the stock market is going to go down, my opinion, most humbly, is that the stock market's going to go down. Okay. We're going to have a correction of some magnitude at some point. We've had 44 in the history of the market, and I don't think that this is going to be any different at all this time. All right. I don't think, if there's been anything that I've learned over my short run in the stock market, is that the stock market is not immune to anything. It's not. It lulls people into complacency. I think there's going to be a huge bear trap for a lot of people who become overexposed at these levels. So if there's community members out there who want to dabble and get started in the market, I'm all about that. But if you're looking to take big lump sums and throw it at the stock market, I'm not one of those folks. I'm not. I just gave you my allocation, and even out of my investable allocation, I don't even disclose what I have on the side. Out of my investable allocation, I'm about 57% invested, and I'm completely happy with that. Completely satisfied. I'm happy with where I am. My life goes on. I still put my pants on in the morning, go shopping at Walmart, blah, 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 right? I still live my life, and I don't really think about the stock market very much during my day-to-day activity. All right. And that's kind of the relationship that I would like to see you guys take on with the stock market, is that you're so confident in your program that you're able to focus on those other things, and that the stock market doesn't become consuming. It doesn't become this big beast that you have to beat. I'm going to tell you, you can't. You can't beat it. So stop trying. Stop tuning into those YouTube channels that think that they can beat it. All right. That's all I'm going to say tonight about other YouTube channels. All right. Because that takes a lot of arrogance to come onto YouTube. It takes a lot of not only arrogance, but basically just kind of it's very naive to think that somehow you have the secret sauce to beat the stock market, when it's been proven over and over again how difficult or close to impossible that actually is. All you can really do is participate in the market. And there's a big, big difference between meeting the market returns, beating the market returns, and underperforming the market. Okay, what type of investor do you want to be? Those are some of the questions that you want to answer for yourself, and we can kind of help you, guide you in what each of those answers can mean for you. If you say, I want to be a little bit more passive with my approach, or I want to be a little bit more active with my approach, how can we meet some of those things through some of the solutions that we talk about on the channel? It's good stuff. All right. I've got Dan Tanks in the group here. We are back. we're back for tonight. At least they haven't pulled the plug on me yet. That's good. I guess I'm still coming through live from Virginia. So I'm really glad to be with you guys. Thank you for the flexibility. Again, over the summer, I go through waves of uploads. You guys see that I come out with content. I understand if I pumped YouTube full of stuff every other night or every night, my income would probably go through the roof. I'm taking a strategic gamble a little bit by not doing that, but I do not want to inundate the channel. I want the quality content that I put on. I go through 10 topics before I'll pick one and put it on there. Okay. I go through quite a deliberation. I go through that deliberation when I'm running, actually. I think of YouTube topics and I think, well, would this be a good topic? Would this hit the mark? Would this reach a new investor? And I really try to think long and hard about the content that I put on. So I will not provide uploads every other day, but you guys see that I go through waves of, if I get an idea, I throw it down and I'll put it on YouTube. And that's the way it's going to continue to be. All right. So when they get uploaded, great. And I know there's a lot of people who are excited to see content, but I want to keep it fresh. I don't want to just flood YouTube with 1,000 videos. There's channels with 1,000 videos on YouTube that don't say a lot. They don't. So I'm looking to aim at the very, very strategic messaging for individual investors so that they can take that 10, 15-minute message and really may look to put some of the material to work for themselves. Very important to me. All right. We won't compromise the integrity of the message by flooding YouTube and trying to leverage this opportunity for something that it's not. If the channel's going to continue to grow, then it's going to grow my way. Okay? We're not going to force feed growth on the channel. All right? 1979 Woods in the group here. It's great to see you. Brody Bell is in the group tonight. I'm pretty excited to see Brody. And I seemingly remember Brody reaching out to me, and I don't want to misspeak, but I think Brody was the one that hit me up a couple years ago, right before he went to boot camp. And I don't want to misspeak. And if I'm completely wrong on this, I don't think that I am. I think Brody hit me up before he went to boot camp, but I know he's a service member. But it's really good to see. Good to see Brody. It's been with me for a long, long time. Probably been with the channel when we were a small, insignificant channel with 200 subscribers. But I do remember having a great discussion with Brody when the channel was brand new. I was just a new YouTube fella. But really good to see. He's excited he gets to catch a live stream. And that's really cool because I know a lot of people can't catch the Friday live stream, but I think they catch it afterwards. But you, my friend, are part of the community, and you're part of the pillar of what makes this channel special and unique. And thanks for coming in on a Sunday, man. A great special shout out to you. Good stuff. Really good. It's great to see you. Christopher Blaine says, evening, everyone. Good evening, Ryan. Glad to see a live chat after missing out Friday. Family comes first. Another lesson. Yeah, that's one of the intangibles. Maybe you hear me out a little bit, and I know I'm probably a little more engaged in the financial topic than the average bear. I can get on a rant when somebody starts me who's not quite into the channel and into the topic of investing than I am, and it's kind of like I can sense that maybe people are like, what the heck? You know, didn't you see Game of Thrones? You know? All right, independent investor channel is like Game of Thrones to me, okay? But those are some devout people. My goodness, man. I see some Yeti cups at the beach and at the pool, man, with Game of Thrones slogans on it. And I'm like, what is this? This is like a cult following, so it's really awesome. So, yeah. Good night.
Night, Dad.
Good night. Love you. Love you too. So, yeah, it's pretty interesting, but I mean, if there's any takeaway that you can have, you guys can take this information and put it to work so you don't have to think so much about it. Don't think that your opportunity with investing is so much more unique with a financial planner. As a matter of fact, that's one of the most run-of-the-mill decisions that you can make to seek your exposure in that way and not really understand why. I will say in the same breath, I learned a lot from my financial planners. They taught me a lot about a lot of different things. Rule of 72, diversification, all the fundamentals of investing, learned a lot. I was one of those customers that they probably dreaded talking to because I would go in there and take advantage for an hour or however long until my welcome was wore out, you know, until they asked me, hey, Ryan, I've got another appointment, you know, and they were tired of talking to me. But this is cool because I never get tired. Nobody ever tells me to be quiet. I can talk till I want to, but anyway, it's really cool stuff. I've got Christopher Blaine here who also says, anyone making any trades this week? I've been pretty bored in the stock market. I really haven't done any new purchases. Nothing really looks that intriguing to me right here. I, I think if anything, I would like to start a little dabble in my portfolio of some growth names who have really been kind of hammered. I know Bob Wright said that he was interested in some energy names right here. I would say right now is a pretty good entry if you wanted to add some exposure to oil in the portfolio. I've just been abused in oil. I'm used to it. It's one of my favorite sectors to invest in, not because I've made a pile of money, but because it's just it's one of those commodities that I really believe in. I think we need it. I think it's underrated. And I've done quite well. I've also, adjusted and gone into some deep water over my investing in energy. But I think now is probably giving you a pretty good entry into oil if you're interested in adding some of those really interesting staples to the portfolio. I do own the Vanguard's Spider for energy. That's kind of an interesting way to seek out some exposure if you want that broad, diversified exposure. And then, of course, being my favorite sector, you guys know I have not sold any position in Marathon Petroleum. I own Marathon Oil. I own ExxonMobil, Chevron, Royal Dutch Shell, as some of the larger oil names out there. Have a lot of other favorites that I don't invest in: Occidental, Devon Energy, Apache Energy, Pioneer Resources, of course, EOG Resources, just some phenomenal oil companies out there. I do like both of the servicers. I do invest in Halliburton here. Schlumberger looks extremely attractive here in the mid-30s. It's a mind boggle that this fine company is where it is. And we'll be reflecting on these times now and being like, wow, what was I thinking? And the problem is nobody's thinking. That's the cool part about it. And Bob said a few things in the pre-funk before the live stream tonight that's actually very, very smart. You have to kind of think a little bit contrarian. Now, they're not going to work out all the time like that. You can't always just be picking the bottom of the barrel stuff, because right now energy's out of favor. He knows that. That can be sometimes the best way to at least acknowledge. Don't ignore. Doesn't matter if you don't want to invest in any of that stuff, but pay attention. Your awareness to the stock market is going to provide those opportunities for you to maybe take a little dabble in, and provide those opportunities for you. If you're just immune to seeing those opportunities, got to get conditioned to looking at some of those opportunities. Like Christopher Blaine's talking about the 3M opportunity. I think you're getting a really good entry here. I wouldn't try to nitpick it too much. I think it's just come off so heavily that I do think you're getting a fairly interesting entry here. I'll probably look to add more to it, but I'm happy with my industrial exposure at the time. So I'll probably just continue to hold what I have now in my 12 share position in 3M, and live to fight another day. We'll be fine. We'll continue to rake in the big dividend in 3M. So let me cruise down here. Bob Wright says VTI has been a good swing trade. I've already mentioned this. I think this is so true. Doing some opportunistic selling right here with the market at an all-time high. Is this the time that you really want to be going along the stock market? Well, it depends on your amount of exposure. If you're looking to buy your first 10 shares of VTI, at $1,400 and change, okay. But if you're looking to take $500,000 and putting it into VTI, I think you're crazy. See the difference in application? You say, well, is VTI a buy right here? The market's at an all-time high. So is now the time you want to be putting large chunks of capital to work? If you're interested in putting some money to work, use a certain percentage of that and put that to work with the opportunity to scale down if that's what ends up happening. But there's a good chance of that happening. It's not as if there's no chance of that happening. Come on, guys. Play the psychological game with me. What are the chances of the market continuing higher? What are the chances of the stock market going down? Now, the trick is to align your risk profile to win in either case. Okay, it's just I don't know how aggressive you want to be on this stock market. I have folks that that are part of the community who are extremely risk averse, and they're all about it. They don't really care. And those are sometimes the craziest, best investors. I can't invest that way. I don't invest that way. I don't come from money. So when I put capital to risk, I do so with the intention of getting the most bang for my buck. I don't like to see my money just jerked around. I wouldn't just take 100 grand of capital and just put it on this market just because. No way. I feel like I know enough to know that that would be a foolish way to enter the market. Now, conversely, if I was that person out there who had a great job, great pension opportunity, had 100 grand in the bank, was debt free, looking to put some capital away, and somebody said, you know what, I want to be a passive investor, it is $20,000 out of the $100,000 chunk. Is that worth it? Now you're talking 20% in the market? Sure. Now that's a reasonable risk profile to take on, even with the market in its current condition. That's how we have to think about exposing capital to the stock market. If we were in a bear market and we were down 40, 50% from all-time highs, and I said I would take 80 to 100 grand of it and put it to work right here, y'all think I was crazy. But that's the difference in application, and that's the way I think. All right, buy when nobody else is buying, sell when nobody else is selling. Because I guarantee over the last couple months, this has lulled a lot of people back into the stock market when me and my friend Bob Wright are talking about taking a little bit of profit off the table. And we're good to do so. I'm happy. Thank you. Good luck with your buying right here. I'll be taking some profit off of the table. I'm an opposite thinker. Okay. I'm typically selling when everybody else is buying because it's easy to buy when there's euphoria in the stock market. And it shouldn't feel good just because everybody else is doing it, and therefore it's okay for you to do it. Okay? Very important. All right, cruising down here. Christopher Blaine, I sold my Carnival Cruise Lines after capturing the dividend and making a few bucks. That's awesome. Fast Graphs did a nice video on CCL, but I need that money for 3M. Okay. Be careful you're not robbing Peter to pay Paul. I know you're trying to manufacture some cash. Don't do that prematurely. Okay. Allow your stocks to work. Okay. Those are good positions. Carnival's a good stock. Not really an industry that I'm really that interested in, to be honest with you. I do own Disney, which operates its own fairly successful cruise line in and of itself. But yeah, that's just kind of an industry that I'm kind of off of a little bit. I don't really follow it. I put it in the same category as airlines, to be honest with you. But I like your comment. Thanks for leaving that in the group. If I buy it, will probably be an oil stock, Bob Wright says. I've already addressed that comment because I thought it was pretty smart. Kind of brings to light some of the opportunistic things that at least deserve to be thrown into a live stream on the Independent Investor channel. Those are the types of things that I feel like a lot of other channels don't really talk about. It's like they want to talk about the same tired industries, and it's like there's 11 sectors to the stock market, guys. Each one of them at times deserves some love, and right now utilities, man, is getting some freaking love. How can you not love utilities and the dividends that exist therein? It's exciting. You guys got to get excited, man. It's really cool stuff. You guys know, and I took profit. I do still own Duke Energy. I took very good profit in Nextera Energy. Took profit there. I still own both of those names through the VPU. The small position that I've got there, it's just making a killing. It's just an awesome sector ETF. Don't have a lot there. It boosts my exposure to utilities up a tad so I can continue to reach that optimal allocation. Okay, I don't mean to use big words, but I'm looking to achieve 3% in the portfolio to utilities. That's just where I want my weighting. There's no hard and fast rule behind that. But 3% to utilities gets it done for me. That's what I'm satisfied with. Continues to kind of churn that dividend out. Kind of a cool thing. And Duke Energy is on fire. But Nextera shot up pretty good, so I wanted to take some profit there. We'll see what happens. No big deal. And those are stocks that when I sell, I'll continue to monitor them. If they do adjust back, maybe I'll enter back in the position again or be a little bit more aggressive if I get a little bit better of an entry point and the market does adjust back a touch. Okay. The market is so close to hitting new all-time highs. I noticed it falls after hitting all-time highs. I kind of addressed this because it was such a good comment. Lydia offered the comment in the community there. If you guys kind of are tracking where I'm at in the comments section of things, and that's just that technical resistance. I don't think the market has a whole lot of excuse to break out. So it's going to hit that resistance, and then you're always going to have that geopolitical risk. You've got domestic political risk, to be honest with you and frank. We have some situations going on within the country. I'm not going to regurgitate those for you guys, but if you're paying attention right now, those are some of the things that can affect the market. A lot of good things going on too. I don't want to overshadow that, but does the market have enough to steamroll through those resistance points at an all-time high? I think not. That's just my opinion. Again, I offer that for entertainment purposes only, but it's gone up really, really fast over the last couple years, and I just think we've cruised up to 6,000 points ever since the Dow hit 20,000. I think we have a better chance of seeing 20,000 again than we do 30,000. That's just my opinion. I could be completely wrong. We could enter into a bear market, recession, etc., and settle out somewhere in the 21, 22,000 Dow range. Maybe the S&P cruises down toward 2,000. We'll see, which would be a very, very steep recession. But we'll see. I just think it's run up so far, so fast that we may have a little bit of rubber band effect on this market when it does decide to go ahead and adjust back on us, but we will indeed see. Thank you for leaving that comment, Lydia. I very much appreciate it. And it's great to see and hear. I think Lydia is the only channel creator that's in here. If I knew that the channel creators' time to come into the live stream was on Sunday, I would probably open it up a little bit more, but it's hard to do on Sunday because I do actually have to work to pay the bills tomorrow. So I'm not making enough through YouTube. As a matter of fact, if they turn me off this little project, I don't know, we're going to have to start over. We're going to have to come out with the Independent Investor Channel 3. I don't know. We'll see what happens. I just had a ton of comments dumping the goop here, so we'll see. You guys are talking kind of amongst each other. There's a couple of interesting comments I definitely want to get to, so I'm glad I have an hour left. Do bear with me, guys, because I am going to get down here. I did tell Chien Chow is in the group now. Hey, Ryan, I just messaged you, and I'm currently 25 years old. So that's one of the criteria that I like to have when I make just a quick identification of where you are and what type of prospects you can find for yourself in the investing world. It's not rocket science. It's not. Okay, but you just need to understand, give me the opportunity to bounce some ideas off of you and kind of articulate what I'm thinking when you throw these attributes my way. And when I see 26, the first thing that comes to my mind is young. You're very, very young. You've got the world ahead of you, okay? So make sure that before you get to decision time and you go through this planning thing that I've got here, this is kind of the flow chart of how you go through this decision process. And what I've got here in step one that makes sense is to justify why it is that you invest. This will help you why you invest, okay? By setting your financial goals, your investing goals, but I'll tell you the reason why it's important to invest is for the prospect of earning compounding interest and to outpace inflation, okay? Those are just some givens. Those are some constants in the investing world. Now, you can come up with whatever investing goals are going to resonate with you and kind of help you stay long over the long term. But as you start to kind of work through here, try to divide between two options as far as what type of investor you think that you want to be. And if you have no idea, that's totally fine. Totally fine. But there's traditionally a couple types of investors that I've found can succeed in the stock market. It's a little trickier to succeed as an active investor, one that enters into and exits stock positions on a fairly frequent basis. And I'm not going to tell you that it's impossible to meet or even exceed the market, okay? But becoming a passive investor is one of those things that you can do with diversified index or ETF products, okay, that can almost guarantee that you get as close as you can to meeting the market, okay? Now, I don't want you to underestimate what it means to meet the market, because a lot of people will attempt to be an active investor only to underscore or drastically underperform the market, okay? Because they think they can beat the market. Now, you can do a blend of both if you'd like, okay? But a passive investor, for all intents and purposes, is somebody that just invests passively in the S&P 500, funds it over time with a dollar cost average schedule, and goes on about their life, okay? The trick is, here's the trick, okay? It's not a trick. It's not rocket science. I said this was going to be very, very easy. If just for sake of discussion and you're 26, and I'm going to continue to read what you have here as we go through the exercise, because I told you I was going to do this during the live stream. I wasn't kidding. All right. 26, very, very young. The secret for you is going to be to get that diversified exposure to the stock market, become a participant in the market, but to do so in an account that's going to allow your money to grow unobstructed over time. If you just heard what I just said it as crystal clear as I possibly could. At 26 years old, you don't have to try to outsmart the stock market. If I had it to do over again at 26 years old, I would invest in the S&P 500 and I would dollar cost average that money until the cows came home. I really would. It would be the easiest thing that you could do. And for a lot of people, it's the hardest thing that you can possibly do, because you start investing in the S&P 500, it shoots up 10% and you're like, I got this licked. This is easy. I'm going to sell it all and I'm going to buy it 10% down. And it's going to continue up another 5%. And you're going to jump back in the market. Then it's going to go down 20%. And you're going to get into this vicious cycle of thinking that you can time the market instead of keeping that core investment dollars working for you at all times. And when you seek those opportunities in the market, do so by increasing your position. Don't ever sell when you're looking to accumulate wealth. At 26 years old, the word sell really shouldn't be in your vocabulary. You should be looking to construct wealth from a builder's perspective over time. And if you invest in the S&P 500 over time and you strategically buy the market as it goes down, let's say the market comes down 10%, use it as a buying opportunity. If it goes down 20%, use it as a buying opportunity. If it goes down 30, 40%, the last thing I want you to do is panic. I want you to have the mental makeup to look at that market down 40% and go, yes, this is my opportunity. And most people don't have the psychological discipline to do that, okay? He says here, I just messaged you, I'm currently 26 and I have about 50,000 capital to invest in the TFSA. So this is Canada, awesome. And how do you think I should divide them? So I will premise this, and I'm very, very careful now. I can't give financial advice, okay? What I can tell you is this. The stock market is one of those places that at any given time, you can look to become a participant in the stock market. The old cliche is there's no better time than today to invest. That's true, okay? So you're coming to the channel and saying, hey, I'm interested in getting invested, is a very, very good one. But I can tell you this, you have an infinite amount of choices. You really do. And here's the spectrum of choices for you. I'm going to define it for you now. You can remain a non-investor and keep your $50,000 in cash, losing out to inflation every year, right? Remember my goal, outpace inflation? Okay. That's one end of the spectrum. The other end of the spectrum is to take that entire $50,000 and invest it into the stock market. Okay. Those are your two spectrum ends. Okay. And you've got everything in between. Okay. This we're doing is defining our landscape. Now, the question for you becomes, as you work through this and you define your investing fitness, determine your level of debt and determine the amount of savings that you're going to want to start as a separate pillar in your total financial picture. The savings is going to be your buffer. Okay, if you have $50,000 capital, but you don't have one single dollar in the savings account, I would throw a little bit of a timeout or a pause in this and saying, look, I commend you for saving, right? 5 stacks of high society is a lot of money. It's nothing to shake a stick at. It's a great amount of money. I commend you for doing that. I really do. But at 26 years old, you don't need to get crazy, okay? Depending on your level of risk tolerance will determine where you are on that spectrum from going from a non-investor to an investor. And there's nothing wrong with stepping into the market slow, okay? Maybe you want to take 20% of that, take $10,000, step it into the market and work it that way. That's just an option. And that's a lot of what we talk about is fundamentally entering into the market. And I know you guys have in Canada an equivalent to the entire stock market. I don't have the ticker symbol, but you, if you are in Canada, you know exactly what I'm talking about. I would encourage you to look at that option for yourself, get diversified, and seek out exposure to the broader stock market from a diversified perspective. And become an investor for a while, monitor it, allow your money to fluctuate a little bit, let yourself get used to it until you start to strategically pick these opportunities to infuse that investment, okay? Because here's what's not gonna happen. You're not gonna be able to take that $50,000 and turn into a millionaire within 5 years, okay? That's not gonna happen. So make sure when you're looking at these investing goals that they're realistic and they're goals that really make sense for you, okay? Make sure that they're goals that are going to keep you vested over time. Make sure that they're goals that are going to keep you grounded during times of volatility, okay? I really commend you coming in here and sharing your opportunity with me, and hopefully I've given you some tools. Take in mind, there's a lot there. Give yourself a chance. Stay with the message on the Independent Investor channel. Excuse me. Because allowing yourself to invest and invest with the idea of liberating your dollars, you're going to save so much more over time by doing that than picking the right stock. Okay, because that doesn't exist. Your program is going to mean so much more to your ability to accumulate wealth into your future than your ability to pick out a magic solution of getting in and out of stock over the course of your life. Okay, your ability to stick with the market through thick and thin, add to it where you can, build upon it where you can, and stay steadfast in your program. That's going to be the psychological approach that's going to help you work over time, rather than you come on here and seeking out advice that I can't give you anyway, but hopefully that gives you a structural foundation of rhetorical questions that I ask to make you think about what type of investor you want to be, man. Really good stuff. Thank you for coming on. Really appreciate it. Congratulations for finding the message. I deal with a lot of folks that invest in Canada, and they get to invest and enjoy some of the opportunities that we do as well in the United States. So it's great to have you. Share the message, and hopefully that helps you. If you need any points of clarity, don't be afraid to hit me up. But I would also just ask that you go back and review some of the catalog of videos that I have, and hopefully a lot of those questions will be answered for yourself. Really good stuff. Oh my God, Roku is up $100 a share. I've been saying to buy it forever. I love that company. You love it now. You sold it. I think she sold it. She might have bought it back and is making some good profit. This is high growth. I mean, it can go down as quickly as it can go up. If you did sell it early, don't beat yourself up over that, because I know you did make money, but it is a cool company. It's a cool product. But that's a tough one. That's a really tough one, because, man, when these things go down, they go down really, really quick. All right. I think let me cruise down here. I've got some other comments toward the bottom of this thread that was really good. Jeff Koski says, hey, hey, hey. That's one of my favorite Neil Young songs. So thank you for that. Thank you for reminding me of that. I've got Ernest in the group who says hello. He's back monitoring the live stream. Ernest, thank you for the responses you gave in the Facebook group. Really appreciate that, man. Just very, very, I'm in debt to you, man. I really appreciate your contributions there on some of those technical questions that we're getting hit with in the Facebook group. I appreciate it. Got a financial advisor ad before the stream. I thought the same thing, actually. Greg Cammy's in the live stream tonight. Great friend of the channel. So I could find that ironic as well. Like, it just goes to show they don't review my content. And it also shows how unique this message is, honestly, because it's the genre of money. But it's ironic that they put their stuff in front of a video that's basically going to trash on them. Yes, I'm down on them, and rightfully so. I am. I advocate for the individual investor, not financial institutions. That's just my way, man. But you're right. I find that extremely ironic. That's funny. Saw two reports about the same data on CNBC, one explaining when market will go up. Another headline for some data said opposite. Guess they think the average viewers don't notice them playing both sides. Oh, I do. I absolutely do. It's so funny, man. They tend to drive the narrative, especially when it starts to get negative. Oh, my goodness. They'll have every bear on CNBC, and they'll put them on there. CNBC is my favorite channel. If I was stuck on an island and I had to pick one channel to watch, CNBC would be it. I really enjoy it. I really do. But I do watch it through a lens, and it is frustrating because a lot of the information isn't really that helpful for especially new investors, because they would seemingly have you believe that you can just get in and out and sell. And Fast Money is the worst show for that, even though I really do like it. I like the investors that go on there. I really do. They're very smart, very capable. I like some of the technical analysis they do and some of the offerings that they put on there, but good grief. If you were a new investor trying to make sense of that, good luck, because you'd have a hard time doing it. Jose Uella says, glad to see you are not blocked by YouTube. Well, I'm not blocked right now, so we'll see what happens. I do think that was a spam attempt to the channel, but we will see. I don't know. Just got the YouTube notification, a new record for them. Good stuff. A new record for YouTube, maybe. I don't know. It was the YouTube. It was the YT that emailed me. So I don't know. Maybe I'm breaking the rule right now. Who cares? Whatever. Let's see what happens. Yabi F, yes sir. Keep this real channel up indefinitely. I hope so, man. We're going to continue to grow. Nothing ever comes easy for me. Okay, I'm not one of those fellas that are going to come onto YouTube and have some viral video make me 5 million subscribers. And make my channel blow up. I've never, ever had anything like that come easy for me. Never. I've always had to work for it. This will be no different of a project. But I'm starting to kind of realize maybe there's a lot of benefit to having folks on the channel that actually want to be here. Honestly, I don't really care to have folks on here that don't want to be here. I don't really care to have folks come on and not relate with me at 41 years old and not respect the amount of experience that I have and what I bring to the table and what I offer for folks that I'm aiming the message at. I don't have really a whole lot of time for that. I don't have time for it now. I don't respond to hate on the channel. I get very, very little, and I'm satisfied with that. But when I do have folks come on and try to poke and prod, I just can't believe people have time to do that. I really don't. Perhaps maybe it's a sick entertainment that people get out of it, but I don't know. Jeff Koski says an all-nighter. Yeah, I'm crazy enough. Don't test me, because I've worked all night too. I've pulled all-nighters in my life. Have you? I no doubt you have. Just joking. Appreciate you coming on. Appreciate you. appreciate the comment and appreciate you being part of the community, man. Man, that's a good idea. I've never really thought about that. You guys want me? I would be the first YouTuber in history to pull an all-nighter, and I'm just the guy to do it too. Honestly, do a 12-hour live stream. That'd be awesome. I might do that. I might actually try to do that. That might be kind of fun. It'll be like a sleepover. How about that? That'll be the title of it. It'll be the Independent Investor Channel Sleepover. We'll do it. We'll come on and we'll talk like we're telling ghost stories, but we'll tell investing stories, and we'll do it for 12 hours, man. I like that idea. That's interesting. I might do that and be the first on YouTube to do it because I'm crazy enough to do it. I used to do it when I was in Alaska fishing. I just work all the time. So good evening, everyone. Glad to be able to make the live stream this time. Sam Ike, another great contributor to the community. It's always good to see these familiar folks come in and help prolong the dialogue. I'm just the facilitator of such. The real success, again, exists with you guys and taking the information and potentially even sharing it with folks. If you want to keep it to yourself, you can. But I didn't know that you could buy and sell stock for free up until a couple years ago. We've kind of blown through some of those barriers. I didn't know that you could really buy certain ETF products within Roth IRA accounts. I really didn't know what the benefits of ETF index fund investing had to offer. Didn't really understand how accessible good paying dividend blue chip stocks and how powerful those could be within an investment vehicle like a Roth IRA. So just some fun things that we talk about as solutions on the channel. If you hear me out, it's very powerful to know what you're capable of. And even if you just took those little nuggets right there and just shut the channel off because maybe you don't relate with me, or maybe you don't like me, or maybe you think you know it all anyway, but you just take those and you're like, wow, I'm just going to make this information mine. I don't care about Ryan. You would be empowered, no doubt about it, to just understand that access to the market can come free of charge. And you can trade stock free of charge through products like M1 Finance for the passive investor. I've got, again, Chow, who I told to come into the live stream. When we offer an account that has the opportunity to invest free of charge through an M1 Finance or through a First Trade, I'm not sure if you have that opportunity up in Canada. I'm not really sure. So I don't want to misspeak. I'm not really sure if I've had anybody come back to me on the channel and say they enjoy it from Canada. But I'm sure that there's an equivalent. You're going to have to do your research to really find for yourself that account that allows you to invest in the stock market with as little or no fees as possible. So very, very important. I've got a good friend of mine in the channel here. A special shout out to Jared Odell, who's in the group here. Hello, everyone, and happy Father's Day to the dads watching today. I'm a dad, and I'm watching. I'm also doing some facilitating. So for you guys that are dads, I'll turn that right back around to you guys. So really cool stuff. Lydia, will you make a video that show your holdings? I haven't seen one in a while. I will. It's changed. The portfolio is really scaled back a bit, where I just hold a few core holdings. I don't mind ever going kind of back to my roots a little bit. I felt like I was getting a little bit spread out in the portfolio where I had a significant amount of holdings. It's still pretty impressive, to be honest with you, but I've scaled out and took profit in some of those names and actually moved into some of those passive assets that I talk about all the time. I don't know, maybe I've turned over a little bit of a leaf a little bit, and that I kind of want to set some of my wealth up out 10, 20, 30 years, and maybe even the possibility of setting up some generational wealth, because I don't know how much of my wealth I'm going to need when I retire. So I'm kind of building my portfolio in mind of that strategic goal down the line, to where I'd like to set something up maybe for my kids, a little bit more generational in mind, and less that I need the money when I retire. You see what I mean? I'm not really looking to have a couple million there that I can actually draw upon when I retire. Maybe at most, maybe supplement a little bit, but I know me, and when I retire, I probably won't need a whole heck of a lot of it anyway. So That's just my approach, but I will do that. That's a really good idea. Thank you, Lydia. I will do that. That'll probably be tops of the agenda. I'd like to do one for the M1 Finance and the First Trade accounts as well. First Trade is going to be up, closing in on $5,000 again. I did that again for the sheer purpose of showing people that it is absolutely possible to go from zero to your first $10,000 within your accounts. And there's a lot of folks out there that are looking to get started in investing that do that. Even Chow, who saved 50,000, getting that first invested piece of capital from zero up to that first $10,000 is a pretty big milestone for anybody looking to get started in the stock market. You're not going to be making those millions, or you're not going to get to that six figures until you get to that first five-figure mark. And that's why I don't overstate the importance of getting to that first milestone. And I'm the first to commend you when you do. It's really a big deal. So Kelvin Ransom is right below in the group. Welcome to you. Awesome to see you this evening. Hey, Ryan, I'm a new investor, 57, old, settling up my Vanguard account. As you say, I appreciate what you're doing for us on the channel. That's pretty awesome. I'm not sure what you mean by settling up. If you're taking some liquidation, that's the way I interpret that. If you say settling up, I think 57, I think that's perfect. I think if I were in your shoes, still super young, I mean, you still want to keep some pay dirt potentially on the table, but you can do it a little more strategically maybe. I don't know what the makeup of your Vanguard account is, but I think it now is about as good a time as anybody in their late 50s. I've done some videos on this, and I tell you what, I would pull a little bit of liquidation off the table here and enjoy it. Maybe put some away, maybe start, depending on the size of the account. Certainly, if you're looking at a seven-figure account, you could pull some of that off and just put some in an FDIC insured savings account. Maybe diversify a little bit, put some into some real estate, maybe a rental, something that can generate some income for yourself. But good on you. I mean, if you've put yourself in a position to settle up the Vanguard, again, implying that I think what you're talking about is liquidating here with the current state of the market, I don't see any better time than to take some liquidations from an investment account with the S&P 500 flirting with all-time highs. I mean, that's just the time you want to do it. So really glad to see you. Pretty awesome to have you in the group here. If you're talking about being a new investor and you're looking at settling up your Vanguard account, I think you meant setting up your Vanguard account. So Vanguard's a pretty good place to grab an account with. I'm sorry, I misread. Actually, you misspelled it, but I think you're saying setting it up. Vanguard's okay. Just keep in mind you can own Vanguard products in any account. What I mean by that is I have my account through Merrill, which is Bank of America. I have a couple other brokerage accounts as well, spread out. And you can own Vanguard ETFs or index funds through any account. So make sure that Vanguard is the broker that you want to go with to set up your actual account with. Just keep in mind, you do have a lot of freedom and flexibility, and Vanguard, very established, very reputable, very good. But their incentives aren't quite as good as what I would have thought they would have been. And they don't care. They don't pride themselves on that. That's not their thing. Whereas you look at some of the other brokers out there, Fidelity, TD, Chuck Schwab, some of the premier brokers. I'm with Merrill, who's very good. Some of those brokers will give a little bit lower incentive thresholds if you're looking to set up accounts. And I don't want to talk you off of Vanguard. I just want to, for the sake of discussion, throw out your other options, that of which I get hundreds of opinions on these additional brokers. So if I get one negative opinion on a broker, I don't mention it. Okay. So these are the top tier brokers that I get, that we talk about on the Independent Investor channel, So keep those in mind. Vanguard is not typically one of those brokers that I mention because of the high incentive thresholds. But it depends on how much money you're working with there, and if you're working with somebody with Vanguard who's helping you get that set up. Pretty awesome. It's really great to meet you. I'm glad to have you in the community. So glad that you can make it up on here on a Sunday evening. I'm really glad to have you. So really good stuff. Bomba 2 says, welcome back. Wonder how escalation of incident involving Iran being handled as far as the market goes. Yeah, seems like Wag the Dog movie maybe played out in real life, no doubt. Who knows? It sure did spike oil. I look for oil to maybe make a spike again tomorrow again. It went up, didn't have a whole lot of time with the market still open on Friday for it to really react to the tanker getting bombed over there. But we'll see what happens. I've got F. Estevez. Hi, Ryan. I have a question. Can I have 2 Roth IRAs? You can. You sure can. It's just your contribution cap is still in play. For example, if you wanted to do $3,000 per 2 accounts, the maximum contribution for a single person is $6,000 this year in 2019. Okay, so if you wanted to split those, you certainly could do that. Okay, I am using M1 Finance and opened 2 Roth IRA accounts. In each account, I have 37. Great. I'm married and I'm the only one who is working. So do keep in mind that you do have the opportunity to carry 2 accounts. You could do 2 accounts, each of them being eligible for a $6,000 contribution. That's exactly what I do. Okay, so keep that in mind. But yeah, you could have 2. You could have 1 for you, 1 for your wife, if that's what you wanted to do. You could open 2 yourself if that's what you wanted to do. But keep in mind, you're just restricted to that $6,000 per account per year. You being married, you're eligible for 2 accounts, $6,000 per account, $12,000 total in those accounts. Okay, you could spread that $12,000 across 5 accounts, 10 accounts, whatever you wanted to do. I don't know why you would do that. I typically don't think along those lines. I typically just try to work out of my 1 account, and I can get anything that I need to get done within that 1 account through strategic pillars within that account. For example, my dividend portfolio, my growth portfolio, my passive portfolio, that's all contained within my 1 Roth IRA account. Okay, so it doesn't mean that you can't hold multiple assets within that Roth IRA. Okay, good stuff. Cruising through. I think you have one for your wife too. That's right. Thank you for that response. You get some of these guys will respond to you as well in this, because I get on my rants and I start talking, and we're running a little bit low on time being that it is a Sunday, but very successful live stream tonight. I really thank the group for coming in. It's just been awesome. I'm going to continue to try to work through here and address most of these questions. Love to hear about passive investing from Ryan always. Yeah, I mean, passive investing is one of those things that typically is like the non-sexy way of investing. It doesn't typically draw a lot of views. You know, everybody wants to hear about stock, and stock is great, but man, I tell you what, picking stock, picking investments that are going to work out over the long term, very difficult to do. Whereas there's really a significant benefit to entering into the market as a whole, and allowing those companies that are going to enter into a defunk for a while, or a big funk, or a large downturn, General Electric, you know, and you don't hold those names individually because you're insulated through owning the entire broader market. It cannot be understated how important that is. And if you're going to seek exposure to the market and you don't want to do a whole lot of babysitting, that can be the best way to seek out your exposure to the market. And it can be a whole lot less of a headache as well. Remember, the key is the account that you hold those passive assets in. That is the key. Okay, if you're entering into the S&P 500, or you're entering into a passive diversified, or a managed mutual fund, people go awry all the time. Thousands of people make this mistake all the time by entering those mutual funds into a Roth IRA account only to be subject to a managed situation. So not only are they paying the high expense to entering into those managed products, but they're also paying a management fee every year to own those accounts. They're giving away the farm. It's really tough. Okay. You can have multiple under your name. Thank you. That's a re-emphasis of my answer there. Thank you for that. Hard times. Appreciate that. That's awesome. Bob Wright, I agree, Lydia. You will get another chance. It's probably talking about Roku. Don't mean to rub it in. It's not going to be your first one. Come on, toughen up. You're good. So we never know with the market, but opportunities always present themselves. That's really true. Very true. I agree with that, Lydia. I always want to try to scour over and let the bygones be bygones, water under the bridge. You know, you're going to win some and you're going to lose some. The idea is that you win more than you lose, okay? If you're losing more than you're winning, you might want to consider looking into a passive investment vehicle, all right? And that way it'll at least guarantee that potentially year over year you're meeting the market, okay? Super important to understand that perspective. Be honest with yourself. What type of investor do you want to be? You know, if you want to be an active investor and you're just not very good at it, read about it. Educate yourself up a little bit. Sharpen your instinct. Because I will tell you, a lot of active investing has a lot to do with instinct as well. It really does. And paying attention to the market. If you're unwilling to pay attention to the stock market and you just want to buy a stock willy-nilly based on your neighbor's recommendation, you're probably going to lose. All right. All right. Douglas Brown says Maryland. It's awesome. It's beautiful. I tend to remember funny things about. That's why I asked, because I think I have an idea about where certain people come from. I know some of the folks and where they come from. I know where Lydia comes from. I've known her for a while now, ever since I endorsed her channel. But it's kind of cool to connect with people. I mean, you guys know where I'm coming from and kind of know what I bring to the table. I don't know, it just makes it a little bit more enjoyable in the community. So thanks. If you heard my, so Hard Time says Central Virginia, probably some of the most beautiful country. I got to check that out. I wasn't kidding when I talked about driving through the Shenandoah Valley to get around Washington, D.C. Man, it was crazy. It seemed like I was driving through Stafford, I think, if that rings a bell with you. So Central Virginia is obviously much further over to the west than where I am, but it's really cool. Orange County, California, been there, done that for sure. That's awesome. Hector Mendoza, great friend of the channel. Great friend of the channel. Hectorman's Southern or Northern OC, 34. You guys are funny, man. You guys are throwing this back at me. I appreciate that. Sarasota. So, we've got representation, Scott, Buskirk, and we got representation from all over. And I don't do that for any other reason other than just to point out we're all coming from different areas. And if you can take a little perspective away from, my little voice, man, it's only one voice on YouTube, but it can be a very powerful voice if you take and deploy in the correct manner. And the reason why I do that is to kind of connect with you guys as well, kind of understand a little bit about where you're coming from. It really helps me. It really helps me kind of understand and fine tune my message as well to deliver it to be the most impactful. Okay. Ryan's got the tan going on, a little barbecue, a lot of swimming pool time, no doubt. You call that a tan? That ain't no tan. Jesus, man. I go from white to red back to white again. So thanks for noticing. Good stuff. Long Island, you bet, man. You bet. So, yeah, spent some cool time up there. So where Jones Beach and Fire Island and all that cool stuff. Some cool places up there, man, up by the lighthouses. Good stuff, man. Nice, the closest island to Catalina. Yeah, I used to fish behind Catalina. Quality versus quantity is always better. Your quality. But yeah, I don't know. I really appreciate that. That's really awesome. I guess my prop. I'm very modest. This channel could probably go away and I would be fine. But I do have a sense that we're really making an impact. I really do value the relationships that I've made. I know there's been a few folks pop in here tonight, but you guys see how I point out some of these folks, like Bill Williams, for example. I see Bill on here. Bill's been with me a long time. Some of these guys like Greg, who I converse with on some of the some of the videos that come out, very loyal, staunch supporters of the message. And they know, you know, I deliver this from a perspective of just a regular everyday fella. And I like that. I'm not going to come on to YouTube and pretend to be something that I'm not. That typically is what allows me to relate with a lot of folks, because a lot of folks out there are the same way. They really are. All the power to you if you want to be an entrepreneur and you want to make millions of dollars. All the power to you if you want to drive a Ferrari. That's all good and plenty. But I've got enough perspective at 41 to where I've kind of come full circle a little bit. And I've kind of come to the realization that perhaps maybe if that ever happens for me, so be it. If not, I'll be perfectly fine. Perfectly fine. And I think a lot of people can relate to that. And I think it relates to a lot of people on the ground level. And a lot of people who are just looking to get by, maybe improve their lives a little bit. Not looking to stumble and fall into wealth, not looking to work 18, 20 hours a day, but looking to take that little piece of knowledge and empower their lives. And that's what we're looking to drive home to, man. That's really cool. That's a very sweet comment. Thank you. Thank you. I'm not blushing. Trust me. I'm sunburned like a lobster. So can't believe I caught a live stream. It's like catching Bigfoot. Oh, come on, man. I got 55 of them online. I don't think there's a whole lot of folks that are willing to come on, and I don't care. I know there's about 1,000 people that catch the live stream after it's all done. But I think there's a real specific value to providing opportunity for folks to come on and just shoot it a little bit and open up some discussion. And it's a little piece of clarity that I can throw through on the channel. But you're right. I don't know, catching Bigfoot. I'm hardly Bigfoot. I'm just a regular fella, investor type fella, hardworking fella. What's your Instagram, Ryan? So if you go to the my Independent Investor Channel homepage at the top right, you can click over to my Instagram, and it'll take you right there. Okay. So please do that. Go to the homepage, the Independent Investor Channel, YouTube, and you'll see there to the right up on the channel banner, you'll see the Facebook group link. You'll see the Facebook page link. You'll see Instagram. You'll also see the links to the affiliate program for both First Trade and M1 Finance there on the homepage, the Independent Investor Channel. Click over there, follow, maybe hashtag Independent Investor Channel will probably work. I don't even know how that works. I don't even know what spam is. Shouldn't you know what something is before like they accuse you of doing something? If they ever ask me like, hey man, do you know you're spamming people? I'd be like, I don't know what you're talking about, man. I don't know what spam is. I can't be guilty of it. If you talk spam with me, that's the crap meat that comes out of the can that's made by Hormel that tastes a little bit better if you fry it. That's spam. I don't know what they're talking about, man. And they accused me of being a spamming channel. I don't know. I got Mike O here who says, Lydia, do you still feel you need to buy something right now when you get paid? That's a cool thing. I've talked to a lot of people who do that, actually. Investing is such a priority that when they get paid, investing is like #1 priority. There's a lot of value to that mentality. There really is. She's going to build a scary portfolio someday for herself. She's also on a very good career path as well, which I'm very proud of. It's very cool. What little bit I've been able to pick up from Lydia doing her law stuff right now. Sky's the limit. That's what I like. I love people who are on the way up and will continue to work and claw their way forward, because I tell you what, life doesn't give you anything, man. It doesn't. You got to take what you have, and you'll have missteps. I'm not one of those fellas that says if you work hard, you're going to have it all. No way. No way. There's a chance that you could work really hard and not have it at all. That's the staunch reality of it. It really is. Ryan, bring your brother on the live stream. Bring your brother on live stream. That might be cool. Might be cool. I'll post some pictures through Instagram, give you guys some updates from one of my most favorite places in the world. So if you guys are interested, certainly kick on there. I'll be posting, certainly. Might be kind of fun. Be fun, I guess. I've been trying to talk my wife into coming onto the live stream. She came on once, That was interesting. That was fun. She's got a great heart. I'm her investor, but might be kind of fun. I have no problem with doing that. We have fun, man. This is part of the family. The independent investor chump is something that I do with the full endorsement of the family. And they know how important it is to me, and they know how important it is for me to help folks. It's kind of my medicine a little bit to get me by, and it's cool. The opportunity to meet folks when they come across, and we connect and make good connections. That's what it's all about. It's really good stuff. Got Michael Hayes. I'm also drinking apple juice. Good. That's good. Really good quality stuff. Yeah, aged 4 years. Awesome. Appreciate that. Got to age that apple juice, man. It's really good. All righty. I got Joe Carlson here in the end. I hate at minute 50. I can't. It's hard for the one of my most favorite YouTube channels. When I say I don't watch YouTube, I've watched Joe. I haven't watched him in the last couple months anyway. I've just been super busy. But Joe comes on, and I hate to give a shout out this late in the live stream, but I will absolutely do it for Joe. Hopefully YouTube will review it accurate and leave you alone. Scary to think YouTube can easily deplatform and shut someone down. I guess, yeah, I guess that can happen. If I have to be a martyr, so be it. I know you know that my intent is to provide help for folks and push out a little dab of testimonial, which is why I like your channel so much. You do the same thing. And I think a lot of people are being helped by your message, not hindered. So I'm not really sure. YouTube's really off base as far as their accusation of me. And I don't know if it's response to a very detailed criticism of the channel or somebody's very opinionated review of the channel. But keep in mind, when you're on social media platform, you put yourself out there. You really do. I don't mind so much. I'm a very private person. I really am. But I know they do demonetize. And there's many examples of that for saying the wrong thing or doing the wrong thing. One of my very favorite folks, the Monk Way, has just gone through something very similar. Now, I do believe that the accusation that was made or the email that I got was a spam attempt at the channel, because somebody reached out to me and said that a similar channel creator got a similar email similar to the one that I received. So I do believe that to be the case in my particular accusation, but we'll see how it plays out. Hopefully everything's fine. If they do shut down the Independent Investor channel, I want every single one of my subscribers who are seeing this live stream, and if you're still with me at minute 52 into the live stream, all you need to do is flop over and support Joe. I'd be completely fine with that. And then I'll become a subscriber to Joe's channel and we'll be good to go. No, I'm just kidding. In all reality, I appreciate you coming in here, Joe. And thanks again for your sincere message. I always call out my channel creators. And I've got Lydia in the group here. And then one of my very favorite YouTube creators, Joe, made his way into the group here a little bit late. But all the less, I thank you for coming in and spending a little bit of time on the live stream here tonight. Really appreciate it. Means a lot to me, man. Really does. Thanks, bro. All right, let me cruise on down. I'm surprised my M1 accounts of double-digit growth. What are you surprised for? Hey, don't be surprised about that. You're doing good. I've got Gadio. What do you think about Donald Trump tweet from yesterday? Wow, what a surprise. Donald Trump has sent out a tweet. Let me see. This ought to be interesting. He said if he doesn't win in 2020, there will be a market crash like that of which has not been before. Oh, Jesus, what do I think about that? Well, I think it's sad that the stock market could potentially be subject to such a thing. We'll see. That's really why I'm not really going too crazy on the stock market, because here's the thing. There's a significant movement. There's quite a groundswell from people who are supporting socialistic agenda, democratic agenda. And again, I don't want to get too political on this particular Independent Investor Channel forum, but I will say this. Those political agendas will, in fact, affect the stock market. They will, whether or not we like it or not. So we just have to invest with some care. Okay, invest for the long term. Set yourself up for a good dividend paying portfolio or a passive portfolio. Don't try to get too cute. Definitely don't want to overexpose to the stock market, especially moving into an election year. I don't know. That could be coming from a very arrogant place, which is typical. Thinking that every time he refers to the stock market, I cringe a little bit, because you guys know my feeling about how fickle the stock market can be. And when you start to play with it in that manner, it's not one of those things that I really want to see. So Starbucks at 84.24, I was way off on that one. But we'll see. There could be some truth to it. I think it really could put a shockwave through the stock market. It's certainly undeniable to say that the stock market has been on a tear the last 2.5 years. Whether or not it's been, directly related to this administration, that's probably up to debate. I have my own opinion about that of which I will not disclose through the Independent Investor channel. And you guys could probably know the hint of where I come from. You'd probably have to watch all 300 videos to get that hint to know exactly what my political posture, stance, or belief is. But yeah, I do. I think there's some truth to that. I would like to believe that we live in a world and we are investing in a stock market that is not that weak and vulnerable. But unfortunately, it can really just take a ripple like that to send the stock market on kind of a down slope, a slippery slope, and we'll see. The idea is to prepare your portfolio, not to be reactive on that type of news. But I really appreciate that comment. That's a very smart comment. I've thought about this before, and I actually think there's some truth to that. Okay, so you guys have been going pretty close to 2 hours. Pretty awesome. What's your approach to blue chip investing? Well, it's one of my favorite ways to invest, honestly. I mean, you're looking at companies like Home Depot, Costco, Apple Computers, 3M companies, JP Morgan Chase, some of these large companies. It's some of the easiest way to become an investor. I know if you guys haven't caught some of Joe Carlson's videos, he weights some of his portfolio in a little bit different way than I do. It's really interesting to see some of the top end weighting in his portfolio surrounding real estate, bonds, exposure toward the top, and then with the utilities. I don't want to speak for him, but it seems like some of his favorite holdings are in the utilities. It's almost like guaranteed money, to be honest with you. But there's lots of different ways to become a value investor. I don't necessarily think you need to go always with just blue chip companies, because there's some phenomenal companies out there that are very, very good, solidified value companies out there that can absolutely get it done for you. Remember that the idea is making money, making good dividend income over time. I don't have a whole lot of growth exposure to my portfolio, but I mean, I consider Visa a blue chip, and Visa doesn't play a very good dividend. So you can seek out your exposure in a lot of different ways. I think you'll find that when I do my portfolio reveal, you'll find a lot of value there. That's just typically where I like to be, especially right now with the stock market in its current condition. But don't try to make it more than what it is. Companies like UNH, J&J, Pfizer, Merck, those companies haven't been around for a long time for no good reason. Okay, they've been around for a long time. And when I talk to a lot of people about getting excited about investing, I always use the analogy to say, geez, when was the last time you went down to Disney World? Did you have a good time? Well, look at Disney as a viable option and opportunity in investing. A lot of people don't think like that. When was the last time you pulled around the corner to Home Depot to do some home improvements? There's a reason why That company is so well run and is such a good stock to own. Costco, what a phenomenal business. You don't have to look to find the needle in a haystack all the time in investing. You don't have to do that. It doesn't have to be one of those things that's so difficult that you just get frustrated off of the prospect of investing, never to invest again. Don't make it that. Good companies like a Target or a Walmart, these companies have been around for a long time. Johnson and Johnson, these companies are great investments. Bank of America, JP Morgan. Make it easy on yourself. There's 11 sectors. Real estate is one that gets overlooked all the time, and real estate can be a very exciting way to gain some exposure to appreciating assets. It's really interesting. And if you want to know what some of those assets are, break down VNQ, for example. Go on to Vanguard's website, find VNQ at the very bottom of their specialty ETFs. It's right there. Click on it, go into the ETF, and check out what the underlying holdings are based on their market cap. It's really quite interesting. You'll see, from the top to the bottom, what their top offerings are, and that's what's going to get you into some of those names of some of those real estate REITs, and it's very, very exciting to do. But really good question. You guys will find that I'm typically much more of a passive blue chip investor. That's typically how I invest. Some of my core holdings I've held for a long time. I did just recently here exit Microsoft. I did. I kind of wanted to counterweight my position in Intel, which is starting to swing back again. I did exit my position in Cisco. Both of those had run up quite nicely. But that typically give you some insight on my blue chip investing. Just stay tuned, Christian, and I'll disclose my portfolio in a portfolio review. I like to do those. Those are cool. So you guys can actually look and see what I have and what I've built up over time and how I seek out my exposure. Okay. All right. I like Ford more now that they've invested in Rivian. Might be a better long-term play. I've liked Ford actually for a while. Ford was very attractive actually. DG, Dollar General, DGI, dividend growth investing. You betcha. So weird. A Friday live stream on Sunday. Absolutely. Now I changed the thumbnail for you, man. I did my Sunday thumbnail. It's a little different. Got to pay attention. Appreciate you coming in, Dan. Very good. We're going to wrap it up pretty quick unless I get down to the bottom here. Probably not the best place to mention Bitcoin. I've made some gambling's profit with it. I know. I mean, I like Bitcoin. I do. It's just I'm not investing in it. No way. Forget it. I'm just not interested. It's either a yes or a no with me. I'm very interested in the blockchain technology. I'm very interested to see what technology companies do, all companies for that matter, in establishing their own lines of transaction protection. And they'll do so through the technology of blockchain technology. It's very intriguing. It's here to stay. Bitcoin is here to stay, for example. But if you want to talk to me about buying a cryptocurrency right now at $7,000, if I was wealthy, certainly I would own some crypto in the portfolio. And I know a lot of people will say, well, you need to have 5 to 10% of cryptocurrency in your portfolio. I'm not in that camp. Okay. And I do that by choice. I could be completely wrong. I could potentially be very wrong. Okay. But I'm prepared to be wrong. It's fine. I'm fine not having Bitcoin in my portfolio. I'm totally fine. Okay. That doesn't mean that it's a bad play. It doesn't mean that it's a bad investment. It just, I don't do it. And I'm totally fine with that. All right. Blessing is a blessing until you give it away, which you're doing in your blood, definitely. Hey, Kelvin, thank you for that, man. Appreciate the dialogue tonight. I really appreciate you coming on and throwing some questions my way. Good stuff. I already have 16 shares of VOO, so we've got a wealth builder here in Hector Mendoza. I love this, man. This is an awesome comment. Really good stuff. I already have 16 shares of VOO, VB 21, VOX, 17 VNQ, right? That's awesome. 10 VXUS. So some really good passive ETFs there. MPC is on a downtrend right now, probably bottoming here. 23 of Intel, 30 of KeyBank, awesome. 25 Halliburton, 30 CenturyLink, not so much one of my favorites, but that's all right if you can make it work. Probably raking in a healthy dividend with CenturyLink, right? 49 in 17 shares of AT&T. That's a great, great portfolio. Really looks good. Thank you for sharing. That is awesome. Great. It seems that you have the discipline to hold long. I'm thinking of selling some profits from the last week and a half, about 5%. A little nervous about market, but who isn't? And, I mean, don't be nervous. If you're going to take profits, do so. Make strong moves in the stock market. Utilize, use, and abuse it. You don't have to be married to the stock market. Okay, you don't have to be loyal to the stock market. It's not going to be loyal to you. Okay, investing and succeeding in the stock market will come by way of being mechanical with the stock market. You don't have to fall in love. Remember, no emotion in investing. That is so true. Unfortunately, a touch cliche, but very, very true. Take a mechanical approach to your plan, okay, and stick to it. Very, very important, okay? All right, quality has always been there, quality, okay. Almost getting to the end here. Investing Wisely is the third channel creator here. Again, hate to make the call out at 2:05 in the live stream, but who knows? maybe there will be a few people that watch all the way to the end of the live stream, man. But thank you for popping in here, my good friend. Been with me a long, long time, man. Just an awesome supporter, great content creator. Glad to see you pop in here and show a little dab of support. Good stuff. Brody Bell, no boot camp for me, but I think I remember the guy you were talking about. Okay, cool. I mistook you for somebody else. My bad, Brody. I still appreciate you coming in, and you got a free shout out on the channel anyway. So good stuff, man. It's great to see you. Happy Father's Day, everybody. Appreciate. I got money set aside. They may not need for 30 years. Should I just throw it into a few solid companies and collect dividends, or hold cash for a market dip? If you don't need the money for 30 years, and I don't know if some of these other folks hit you up and responded, but I'd highly consider just looking at that market index, man. You can try to pick and choose and piecemeal away and try to pick those right stocks that are going to outperform for you. But for 30 years, probably not the worst idea to take a look at a crack at the S&P 500. Remember, I mean, if you're getting 8 to 10% rate of return in the stock market, you're winning the battle. You're winning the compounding battle. And a lot of people will fail to get to that compounding effect because they're just, they pick the wrong stock, and it drags your portfolio down, instead of just going with a broader S&P 500 product. Yeah. All right. Cruise on down here. Wish I held my Disney stock. Yeah. It's one win for me for sure. I ended up buying pretty heavy into Disney. It's one of my largest positions. I ended up buying it pretty heavy in 90, and I'm up pretty big in Disney right now. I'm not going to lie. It's been a really good holding, and I did not sell. I've got a pretty good position built up in it. So any small caps you're looking at? Not specifically. I do hold some pretty good small caps in my first trade account. I will be chronicling that, but I do own all of the Vanguard's small cap VB. I own the other two as well on the value and the growth side. I forget the ticker symbols. I do apologize. It's been a long live stream, but no specific names to brag about right now. But I will be chronicling the first trade portfolio for you guys as we do approach that halfway mark toward that $10,000 goal in that account. So keep on the up button will do. Master, another tie, good stuff. And Bob Wright, man, good. Thank you for the discussion before the live stream. So anyway, I'm going to be signing off now, guys. It's been about 2 hours, so I do appreciate everybody's involvement tonight. Thank you so much. Appreciate your time and coming on and supporting the message. We'll keep you posted throughout the course of our ongoing investigation. Hopefully everything kind of shakes out. I just saw Brent pop in here. Happy Father's Day to you guys. Really appreciate it. We will see you on the flip side, guys. Have a great week, and we will check in next time. Thank you so much for your involvement. Take it easy.